Happy Friday, traders. It is Friday, August 8th, 2014. It's 8:02 a.m. Chicago time. Thanks for joining. Trading derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Fair amount of stuff to cover today. Lots of news. Overnight, let's start chronologically. China July trade surplus bigger than expected. The trade surplus for China came in at 47 billion versus 27 billion, almost doubling consensus expectations. China's exports rose faster than expected as well, 14.4% versus 7%. Imports unexpectedly shrank, negative 1.6% versus plus 2.5% consensus. Later in the overnight session, French industrial production came in unexpectedly strong at 1.3 versus 1.0%. This caused the reaction in the market was to lift the euro to pre-ECB announcement levels. At 8:30 p.m. Central Time yesterday, President Obama authorized airstrikes in Iraq, OPEC's second biggest oil producer. The airstrikes are meant to target IS locations. This is said to be the reason for the drop in the indices overnight. Pretty much everything I've read have attributed the drop to that, flight to safety. U.S. aircraft have reportedly been attacking IS artillery just now. These events have continuously resulted in a jump in energy prices. Headline risk is very, very high today. U.S. also announced that it is providing assistance to the Kurds. Israeli-Gaza talks have not resulted in an agreement yet. 3-day ceasefire is over. Israel accuses Hamas of launching rockets into southern Israel. Hamas says it's not doing so, but they're continuing to talk. A Ukraine fighter jet was shot down by rebels, probably by a BUK missile, the same type of system that took down that Malaysian commercial airliner. Looking ahead today, at 9 a.m. Central, we have wholesale inventories expecting 0.7%, wholesale trade sales expecting 0.7%. Again, 9 o'clock, half hour after the open. And then at 10 o'clock Central, we have an ECB 3-year LTRO repayment announcement. Other than that, the calendar's fairly clear for the day. Nothing else expected, but again, we may be hit with surprises here and there in the form of news. Let's take a look at the charts and see what the market has done yesterday. Very interesting trading yesterday. Essentially, what the market did yesterday, what it was expected to do, was the primary hypothesis from Tuesday's action into Wednesday's. So we managed to get down to the 1900. Tested by a tick. We had a failed auction down there, but we did not see really forceful buying at that low. But let's run through what it has done piece by piece. It's much easier to just see the big picture when we walk through it. We opened right at the high of Wednesday at 1923.50. That was the opening print. We had an early swing to 24.50. 22.75, and then we pushed higher to 25.75. It looked like an open rejection reverse, possibly. Could have been at this point. Could have been with the delta coming in here. Could have been an open test drive, and then once it rolled over and made a lower low, it was clearly an open auction in range, essentially. And since then, it's just retested the open with lower lows, so the trend was lower. And as we walk forward, we'll see that every test into higher levels, be it mid, OS, open, was seen with some rejection. So here we are again, testing the OS, testing the open. At this point, the IB low is in, so the expectation is for a lower low into the IB. And then again, as I had discussed yesterday, even though we did not have one hypothesis that was predominant, that could be called the big idea, trade idea of the day, I went through the probability that based on how it opens and trades after the open, we would be able to determine what it's likely to do. And then one of the things that I covered is that if it gets through into 1920 and below, then it's likely to push down into the point of control from the prior day, 1915, but more importantly, it would traverse the entire value area, so down to 12 and a quarter at least. So that's what once we pushed into the prior day's range and we're not able to get out, that's what we're looking for. So multiple attempts to get out here. You can see here 23 quarter, 23.75 against the 23.50 high. So we're looking for the IB low to break. There's the break. And then so next we're looking for that. We're looking for the test of the point of control. There it is, 15 and a quarter. Small bounce, and then now breaks through, looking for it to pull back, fail at the IB low at most, and then continue lower. There it's continuing lower. It's trying to find balance here, but it's unable to. So again, there it is. Once another thing that I said yesterday, 12. Once it gets below 12, we're in the thin volume zone that was left behind by this open drive here, with very little to hold it. Once it breaks into this tiny little volume area, you can see it. I showed you this in the market profile chart right here at 12, 11.50. This string of singles, once we get back in there, then it's likely to zipper down that string of singles. And that's where we are now. We're pushing through the string of singles. Very methodical auction yesterday. As hard as it tries to push higher, it's not able to. Now we're a tick above the prior day's low right here at 5 and a quarter. And then it closes the next point of control down. So now we've crossed into the 1907 to 1905.50 LVN zone left behind from May 27th, 28th, 29th. It comes back to retest through. Very hard to predict this. It looks like it's done here. It's behaving, the rotations are behaving like it's done on the downside here. We don't have a very great low at that point. It was an okay low. Retest of the pulls back right to the mid VWAP and the prior day's close, and then again starts selling. And there it is. It pushes to 99.75, just one tick below the 1900 century figure, and it closes with the point of control shifting down last second basically to the lower distribution. So what we end up with is a double distribution profile again. Sounds familiar. We've had double distribution profiles throughout the week, and double distribution profiles basically mean that the market found consensus at a price and then decided to reprice, and it's a strong sign that the market is seeking value very, very actively. So with the point of control shifting down and the way we close, the expectation is for a lower low into the overnight session. But overall, when we look at the 15-minute, we see that this big wave down found its lower low and had a good chance of stabilizing and seeking higher. Of course, the Obama news changed that a little bit, and that's where we end up with a very, very interesting looking overnight session. So The way we left things behind yesterday, we closed with the point of control below the prior day's low. Point of control is lower than the 2 days balance, so pretty bearish. Value area high is at 915.25, which is the 2-day point of control. So there's a lot going on up here. The pullback was 1375, and we just pushed the overnight session to 1375 before pulling off again. My point is, the auction is very, very methodical. You need to think in terms of what has it done, what is it trying to do. Is it seeking buyers? Is it seeking sellers? Has it found buyers? Is there any evidence that it has found buyers on a drop, and therefore your bias is likely to change into a buy mode, or is it still seeking buyers by just pulling back and continuing to push lower? Let's switch to the overnight. There it is. So we basically snake around yesterday's close. We have a little bit of a blip overnight, and then the announcement from Obama regarding the attack on ISIS in Iraq is at 8:30. This is the 8:30 bar here. The time shown above, 2045, is the end of the bar. So at exactly 8:30, we had this frenzy of selling all the way through to 91.50, an impulsive move here, and then we basically pull back, trade sideways, looking for a lower low. We get the lower low at 90.25, and then we get the corrective wave, which was a lot more aggressive. So the market is, the overnight inventory is actually long, it seems, at this point, with a multi-distribution overnight profile. The point of control still remaining below. This looks slightly bullish to me. The market has taken back all territory, including from when the announcement was made. The market also traded in sympathy with the rally in the European indices as a result of the French strong production number. Again, the euro also responded to that. So that's where we are. That's where we've come from. This is where we are now. What is it likely to do next? It's done a good job of testing lower. I don't particularly like the low left behind overnight. I don't think that's a strong low. It does not look like an excess low. This is a 15-minute chart, and it looks like it was a pretty murky low. But the fact is, the overnight session has pushed almost to the value area high left behind yesterday, and has pulled all the way back to the highest swing before the low was put in yesterday. So to me, if the market was not strong, it would not be all the way back up here. It may have come back, it may have shown some strength, or may have discounted the airstrikes and come back to 1905, but it didn't. It went all the way to 1913.75. So to me, participants are not seeing the issue as too threatening. We have a key LVN left behind from yesterday at 17, and I think that'll be the over-under for today. Looking at, having looked at what we've done so far, 1 second. So another thing I want to point out, again, the same theme as before, something I've been talking about for almost a year. Prices climbing pretty strongly while the volume delta is continuing to drop, and then again, prices flatten out, but they still continue higher in the balance zone that we've had in June, July here, the grimy, pretty terrible trade through most of June and the early portion of July. Things loosened up at the end of July a little bit, and then during that time the volume delta is sideways to slightly down, and then as soon as the market starts to pull back, look at this delta, boom, almost down 1 million contracts from the point at which this chart starts last year. So It's actually worse than that because I don't have enough data going all the way back to October of 2013. But this is what we have here, where the market's so much more ready to hit the bid than lift the offer on pullbacks, when it was doing the exact opposite pre-October, November of last year, where it was so ready to lift. On just a little bit of price movement, we would see the delta push up pretty strong. So to me, it's the market's a little bit top heavy, but the long-term players are not stepping aside yet. They're not getting out of their positions yet. Overall, the point of control has shifted lower. So if we zoom out, look at what we've done here. We have point of control shifting lower, lower. One day it shifts higher, then it shifts lower again. The next day it's in line right here. So let's get rid of this MC. We don't need it right now. So the point of control shifts down. Next day it's in line and it's shifting down while price puts in a higher high and a higher low. Yesterday's action is a bearish engulfing pattern on Wednesday, and we finished near the low. So today we're opening in value and range, and we're looking for a responsive seller since the value, the point of control is beneath us. We're looking for a responsive seller early. I'm looking for 1903, 1903.50 to hold on a retest. If buyers are going to step in, I expect that they'll step in at that point, and then I expect that today's action will be actually stuck in the value area, possibly anywhere from 1901 to 1917. But I expect the action to be stuck here today. We now have this CHVN that was built over the last few days. That's been built a little bit bigger the last few days, right here at 1450.15. So the area is littered with reasons for the market to just not revalue at all. So the expectation, the primary expectation for today, is an open auction in range, and for the market to basically just chop around upwards or downwards inside of the prior day's value area, mostly, maybe slightly bigger, but the range is likely to be 17 to 01 or 17 to 03, and we're likely to be stuck here. I don't expect the market to sell off. Now, I say that with the caveat that there's a lot of news out there. There's just a ton of news that could affect how this trades out. But remember, it is Friday. Fridays are not the best days to sink your account into a very, very poor position. Friday is not a good day to take a 30% hit or 20% hit on your account. Remember, we're trading leverage products here, and so the risk of loss is really, really substantial. That's not just a legal disclaimer. This is the truth about futures trading, options on futures, and Forex. So it's important for you today to really set in your mind what it is you're going, at what point you will stop, and just stop. And just stop when things are not working. Use your emotional charge, use the level of emotion that you're feeling as a gauge for how you're aligned with the market. When you're aligned with the market, you do not feel any negative emotions. Generally, it is completely pointless to think that I can trade and ignore how I feel. What you have to do is not ignore it, acknowledge it, but also put it in its place. Basically say, yeah, okay, it looks like I'm getting a little irritated here. I'm going to stop. Just listen to that sound, but don't respond to it. You cannot trade. The market does not care about your emotions. It doesn't care about your losses or gains or what you expected. The market's interested in finding the maximum number of buyers and sellers at price, and that's what it's seeking to do as it rotates up and down and up and down. The market stops rotating down once it's found buyers, and it stops rotating up once it found sellers. Okay, it's that simple. It's not easy. It's simple. Good luck today, and have a great weekend. Take care.